Welcome back to my channel, ladies and gentlemen. So in today's video, I'm going to be sharing with you a powerful strategy that will generate stream of income for you on a daily basis trading the forex market. There are several strategies in the forex market, but this one that I'm about to share with you is so powerful because it has the best risk reward ratio. So the strategy that I'm going to be teaching you today is known as the demand and supply trading strategy. Most of you may have come across this word demand and supply, but I want to let you know that everything about the forex market is all about demand and supply, right? Because demand and supply are what actually moves the market, right? When there is a lot of supply in the market, the price tend to do what? To decrease. And when there is a lot of demand of a commodity in the market, the price does what? It tends to increase. So that is why demand and supply plays a major role in the forex market. So if you want to understand how the market moves, you need to understand demand and supply. Like I said, whenever there is a huge demand of a commodity in the market, when there is demand of a commodity in the market, the price tends to increase. And when there's so many supply in the market, when there's so many supply of a commodity in the market, the price does what? The price tends to decrease. Let me give you an example of what I'm talking about, right? Now, let's say for instance, now there is a particular phone that just come into the market, you understand? And this phone, people love it so much, and there's so much demand for this phone. People want this phone, but the supply is very small, but the demand is very much. People really want this phone. So what happened? The price of that phone will tend to increase. If the manufacturers maybe plan to sell the phone for maybe, let's say, $300, but for the fact that the demand of that particular phone is too much, they will increase the price to like $1,000 because the demand is too much. But when the phone becomes too much in the market, like when the circulation becomes too much in the market, that everybody now owns the phone, that everybody now has the phone, there are so many supply, that the supply is everywhere, what happens? The value of that phone tends to decrease. What do you mean by that? The price of that phone tends to decrease. So that is why whenever there is a huge supply in the market, the price of that commodity decreases, and when there is a huge demand in the market, the price of that commodity increases. So these are what actually moves the forex market, right? When there is, let's say for instance, now we are trading gold, because I trade gold personally, and that is the best asset that I love the most. I trade gold against the US dollars. Now let's assume now that the gold, there's so much demand for gold, right? There are so many demand for gold. People want more gold, but the supply of gold is small. What happened? The price of gold goes high, right? Now what happens when the supply of gold becomes too much, that there's so many supply of gold in the market, the price of gold comes down. So that is what we mean by demand and supply. That is when you see the gold market, or any market, for instance, like the Euro USD or the GBP USD, but I'm using gold as an example. That is why whenever the price goes up, the price tends to come down. There is no price in the market that goes up and remains up. It goes up and come down. It goes up and come down. So what is causing that move? The particular thing that is causing that move is known as supply and demand. And who are the people that contribute to the movement of the market. They are the big banks, companies, conglomerates. These are the people that move the market. Central bank, government. These are the people that move the market. So in this video, I'm going to teach you how to trade along these market movers, so that you will be able to enjoy the profit that they are enjoying. So that is why supply and demand strategy becomes the best trading strategy in the forex market, because of the risk reward ratio is so interesting. So you are going to learn a lot from this video. My advice for you is that you are going to go with a lot of information from this video. So let's sit tight and watch this video from the beginning to the end, so that we understand what the video is actually talking about. So now let's talk about supply and demand trading strategy. Now, the best way to trade supply and demand trading strategy is the use of support and resistance level. Now, when there is a consolidation in the chart and suddenly the price move very fast, that means the big banks, the big companies have entered the market and they are moving the market. So what do? You simply place your pending order in that place where the move took place, because when the big banks move the market, their orders are not triggered. Some of the orders were triggered, but not all. So definitely the price will come back to test that level, right, to go along with the remaining orders. So when you place your pending order, if the price comes back to that level, you will go along with the big companies and the big banks, and you are going to ride massive trends. So that is how you trade the supply and demand zone. So they say that to find supply and demand zone in a chart, you have to study the chart very well and look at areas in the chart where price made an explosive move and map out that area, right? You need to look for a consolidation and then look at the movement after the consolidation, because when a price is consolidating, the price tends to range in a tight manner. So when there is an explosive move from that range, know that the big banks, the big companies, the guys with the big money have entered the market. So these are the people that move the market. They are the ones that contribute 90% to supply and demand. They move the market up and move the market down. So if you want to enjoy this strategy, you have to trade along with them. Don't trade against them, trade along with them. So that is why whenever you discover such kind of move in a range, then you draw your horizontal demand level and wait. You can place a pending order and wait for the price to come back to retest that level, so that you can go along with the big banks and the big companies. So let me give you an example of what I am talking about and how the demand and supply level works. So now you can see that the market dropped to the demand zone. So this is the demand zone, right? You can see the range, right? This is a demand zone. You can see the range. Now this is the movement that I'm talking about. You can see this long green candlestick, and look at the second one. So these are the movement that I'm talking about. If you open your chart and you see a ranging market, and then you see a move, a very high movement from that range, know that the big banks, the big companies, they are in the market. So now these two candlesticks tells you that the big banks are here. They have placed their buy order here. This zone, this is a demand zone. So what are you doing? You are looking at this zone. This zone becomes a hot cake for you. So what you have to do is this: you bring out your horizontal line and then map out from the highs and the low of that range. because before they move, the market will come into a tight consolidation that the highs and the low will not exceed 30 pips or 40 pips. That if you calculate the highs and the lows, they will not exceed 30 or 40 pips. So what do? You simply draw a horizontal line at the highs and the lows of that tight consolidation mood. That double horizontal line has formed a zone for you. So what do? You now place a buy pending order, right? Let's assume now this is the drop. The market was formerly in a downtrend, and when the market got to this level, the market tended to range. Now the market started to range in a tight way, in a tight mood, and then suddenly there is a very massive explosive move, which is this green candle followed by the second one. So once you enter the market and you see that the market was formerly in a downtrend, right? Then suddenly the market started to range in a tight ranging mood. Then suddenly there is a massive explosive move, which is these two green candle. What you have to do is you look at the range, the highs and the low of that range. You draw your horizontal line at the high and you draw your support line at the low. So the middle becomes the demand zone. So this example, you can see the highs, you can see the low. So this is what we call the demand zone. So definitely, no matter the level that this market travel to, it will come back to this level to test this level. Do you know why it happened like that? Because the big banks, the big companies, they place their buy pending orders here, and because they are placing big money, the market tends to move before they complete their orders. The market tends to move before they complete their orders. So once the market comes back to test this level, their orders will be triggered, and it will push the market even higher, to the extent that the market will travel almost 200 pips. So assuming that you are risking 30 pips to get 200 pips, wow, this is a powerful risk reward ratio. Risking 30 pips to get 300 to 200 pips in a single market, man, this is the best strategy that will help you to manage your money. So once you discover this massive move, then what do? You place your horizontal line at the highs and your another horizontal line at the lows, or you can use a rectangle tool to map out the highs and the low. Right now you are waiting for the price to come into this zone. So once the price goes up and then comes back into the zone to test the zone, that is when you are expected to place your trade. Now there are several ways that traders trade the demand and supply zone. Some traders will prefer to wait for the price to come into this zone and reverse back before they place that trade, because those ones are careful that they don't they don't want the price to reverse and then hit their stop loss, because if the price comes to this zone, you don't know how long the price will travel. So that is why some traders will wait that once the price comes to this zone and then reverse back, they will not place their buy trade. So let's say the price now rally up and then reverse from this place and comes back to this zone to test this level, this zone, right? To test this zone, some traders will wait for the price to come into this zone, right, and then reverse. So once the price come out of this zone, they will not place their buy order, because they now know that the price is going up. Why some will tend to place a pending buy order at the demand zone, either here or here, but they will make sure that their stop loss is somewhere below this low, right? Somewhere below this low. So whatever way that you want to trade the demand zone, what I'm assuring you is that the demand zone works very well. So this is how you trade the demand zone. So this one is how you trade the demand zone. You can see this is a demand zone, right? Now let me give you another example of what I am talking about. Now this is the example, right? You can see this very well. You can see it now. Formerly the price was in a down mood, right? The price was going down. Then suddenly the price started to range. You can see the range, the tight range that I'm talking about. You can see the range, right? The price started to range in a tight mood. Then suddenly you see this long candlestick, this green, this long candlestick. This candlestick tells you that the big banks, the big companies have entered the market and they are going to push the price higher, right? Now, once this price goes up and other price follow them along, you know that the big market, the big banks, you know that the big banks have entered the market. So what you have to do is that you draw your horizontal line at the highs and the low, or you can use your rectangle tool and connect the highs and the lows of the range and extend it to your right. This now forms your demand zone. Now you can see that the price traveled to California. The price traveled all the way from this place to this place, right? Then after making some consolidation, the price tend to come down again to that demand zone to test the demand zone. You can now see that the price came back and tested the demand zone and then move up again. You can see the movement, right? So if you were not able to catch this move, you can exercise patience, because what matters in demand and supply is patience. So you can exercise patience after identifying the demand zone. Have it in the back of your mind that the price will definitely come back to the demand zone, and then you cannot take your trade. So you can see the price make a massive move, and after some consolidation the price came down again to test the demand zone and then rally up, right? So this is how you trade the demand zone, while the supply zone is almost the same with the demand zone. The supply zone is at the upper level. Now you can see the price was formerly in an uptrend, right? This is an uptrend, right? Then when it got to the supply zone, the price decided to range, right? You can see the tight range. See how small the candles are, right? Then after ranging for some time, what happened? This big red candle. This big red candle tells you that this is a supply zone. The big banks, the big companies, they have entered the market and they are going to move the price down. So this big red candle tells you that the market is going down and this is a supply zone. So what do? You plot out your rectangle tool and map the highs and the lows of this range and extend it to the right. So what are you expecting? You are expecting the price to come back after going, no matter the distance, the price will come back to test this supply zone. So once you notice this movement, you simply map the highs and the lows of this range and extend it to the right, and then wait for price to come back to this zone to test it. Like I told you, some traders will prefer to place a pending order. Like this type of strategy is also known as set and forget. If you are a trader that is always busy doing other things, what you can simply do is to just place a pending order. Like you have already mapped out your supply zone, right? And you know that once the price travel, no matter the distance, the price will definitely come back to test this supply zone. So you place your pending order, your sell pending order here, and maybe put your stop loss above the highs of this range, and then put your pending sell order within this zone, right? It can be here, it can be here, it can be here, but within this zone. Then your stop loss will be a little distance away from this high, right? And then when the price comes back again to this zone, it will tend to trigger your entry and the price will reverse and then start heading down again, and you are going to ride massive pips So why is this possible? Because you are trading along with the big banks. You are trading along with the smart money. You are trading along with the big companies, those ones that have big money, those ones that move the market. So these are the people you are trading along with. And like I told you, this strategy helps you to have a better risk reward ratio. Like you are risking 30 pips to get 300 pips. You are risking 40 pips to gain 400 pips, right? Imagine this is 1 to 10 risk reward ratio, or should I say 1 to 20 risk reward ratio. So imagine you risking only 40 pips to gain 400 pips. So imagine that. So that is the power of supply and demand. So my advice to you is that you take our time to master this strategy very well. Go to your chart on your demo account and master this strategy, because this is mind-blowing, right? Now let me share another example with you so that you understand what I'm talking about. Now this is another example I have for you. You can see this is an uptrend, right? Then the price was rallying up and gets to this point, right? And then it started to range. You can see the range. Then after ranging for some time, then this long green candlestick, this tells you that the big banks, the big company, the big conglomerates, they have entered the market, and then they are going to push this price higher. So what do? You plot out your horizontal line and map the highs and the lows of this range and extend it to the right. What are you doing? You are waiting for a retracement for the price to come back to test this level for you to place your buy order, right? Then this is the supply zone where the price will also reverse from. So when you place your buy trade, always watch out for the supply zone so that you can take your profit, right? Because if you do not take your profit at the supply zone, definitely you might lose those profits. So whenever you place your trade in the demand zone, make sure you take your profit at the supply zone. And when you place your trade at the supply zone, make sure you take your profit at the demand zone, because if you don't do that, once the price gets to the demand zone, the price will reverse and you are going to lose all your profit. And if you're the kind of trader that doesn't break even, you might even lose your account if care is not taken. So that is why it's advisable that you trade the demand and supply zone with price action. Please take note of that. Trade it with price action, manage your money very well, and then know when to get out of the market. Like I told you, if you are trading from the demand zone, make sure you take your profit from the supply zone. And if you are trading from the supply zone, make sure you take your profits from at the demand zone. So that is how you trade supply and demand trading strategy. I hope you have learned one or two from this video. If you love this video, give us a thumbs up. Don't forget to subscribe to this channel for more educative content like this, because I promise you in this channel I'm going to give you my best. Like I told you, I've acquired so much knowledge about the forex market and I've had so much experience. 8 years experience is not easy. I've gotten 8 years experience in this forex market. So I promise you that you are going to learn a lot from this channel. So don't forget to share this video on your social media handle, subscribe to this channel, and come back for more updates. I still remain my humble self, Austin Ikeru, and you guys are welcome to Ostino FS. I will see you again in my next update. Au revoir. Bye.